So there is an increase to first-time business buyers in the market in the last 6 months. But are first-time business buyers really chasing entrepreneurship? I don't think they are. I don't think a lot of people entering the market today are dreaming of becoming entrepreneurs. I think they're looking at the world around them, looking at rising living costs, looking at higher interest rates, looking at investment properties, looking at what their capital is actually producing. And they're asking a different question. Where can my money work harder? It's something we discuss quite a bit inside the business acquisition blueprint, not because we're encouraging everyone to buy a business, but because understanding why people are buying tells you a lot about where the market is heading. For decades, property has been Australia's default wealth building strategy, and I don't think that's changing. What is changing is the conversation around cash flow. I'm not seeing people abandon property. I'm seeing more people ask, what asset actually puts money in my pocket every month? Property has been an incredible wealth creation vehicle for many Australians, yes, but in today's environment, it's becoming harder and harder. Holding costs have increased, interest rates have increased, insurance has gone up, maintenance costs continue to rise, capital growth is flattening or going backwards in some regions. It's getting harder to squeeze margin on flips and harder to rinse and repeat. So what does all that mean? Well, this means Australians are perceiving real estate investment differently. It's starting to feel more risky. Now compare that with a well-run business, still inherently more risky than real estate, but a profitable business isn't waiting for capital growth. It's generating income every week. That income can service acquisition debt, it can create personal cash flow, it can build equity, it can finance your next acquisition. And that's why I'm seeing more professionals start looking at business ownership through an investment lens. And what's really interesting is who these buyers are. They're not serial entrepreneurs. They're sales directors, marketing professionals, operations managers, general managers, people who've spent 15 or 20 years developing highly transferable commercial skills. They've built equity, they've built careers, and now they're looking for a more productive home for that capital. One thing always makes me smile, and people tell me, well, I don't think I could own a business, and then they spend the next 5 minutes telling me about their e-commerce side hustle or their website they've built after the kids went to bed or the new app they've vibe coded. Sometimes they're juggling 2 or 3 different side things, and I tell them, well, you're actually already running a business. The only difference is none of them came with established customers, established staff, established systems, or established cash flow. You're spending enormous amounts of time trying to create something that already exists inside a good business. Now, don't misunderstand me. Owning a business isn't easy. It comes with responsibility, it comes with risk, but for many commercially minded people, it isn't nearly as foreign as they might imagine, because the value they bring isn't industry knowledge, it's commercial capability. And I've seen buyers walk away from fantastic businesses because they have convinced themselves that, well, I've never worked in that industry. Meanwhile, another buyer acquires exactly the same business, keeps the existing team, retains the operational knowledge, leaves the technical experts in place, and just simply improves leadership, improves sales, improves marketing, improves customer experience, improves financial discipline. The industry wasn't the competitive advantage, the buyer was. And that's a really important distinction. People often assume they need to know everything about the industry, but in reality, they need to understand how to build commercial value. And that's another misconception I hear all the time. People compare buying a business with starting one. I don't think they're remotely the same thing. Starting a business means creating customers, creating systems, creating reputation, creating cash flow. Buying the right business means acquiring those things. You're buying momentum. You're buying years of effort someone else has already invested. Of course, not every business is a good investment, but there are always opportunities where your own commercial capability genuinely creates additional value. And that's part of what makes buying a business so unique. You can directly influence the outcome. Better leadership, better decisions, better execution, better commercial strategy. Very few investments give you that level of control. And which brings me back to the question I started with. Are first-time buyers really chasing entrepreneurship? I don't think so. I think we're seeing something much more interesting. We're seeing successful professionals become investors in operating businesses. They're not trying to escape corporate life. They're looking at the numbers. they're looking at debt servicing, they're looking at cash flow, and they're looking at what their capital can actually produce, and they're recognizing that an established business can be one of the few assets that pays you while you're building wealth. And I think that's one of the biggest shifts that we'll see in the Australian acquisition market over the next decade or so. Not more entrepreneurs entering the market, more investors discovering business ownership. So if you're beginning to think differently about business acquisitions, that's exactly why we've created the Business Acquisition Blueprint. It's designed to help serious buyers understand how acquisitions actually work, not just how to find businesses, but how to think like the kind of buyers, sellers, brokers, and advisors actually want sitting across the negotiating table. Because the goal isn't simply to own a business, it's to make a good acquisition.